In present video, I am going to explain about first problem from liquidation of company topic. I am taking this question from Pankaj publications book. On liquidation of company topic, I made 4 videos. So in these 4 videos, I have explained the basic concepts of liquidation of company. So these videos links I am giving in the description box. I request you to first watch those videos. Then you will understand this problem clearly. Under liquidation of company topic, he may ask the questions in 4 ways. First one, preparation of statement of affairs. Second one, deficiency or surplus account. Third, liquidator's remuneration calculation. Fourth, liquidator's final statement of account. Out of these 4 types of questions, which one he is asking in present problem, let us see. M Company Limited went into voluntary liquidation on 1st March 2001. Voluntary liquidation. Liquidation means what? Closing of a company. A company can be liquidated in 3 circumstances. First one, compulsory liquidation. Second one, voluntary liquidation. Third one, liquidation under the supervision of the court. What is meant by voluntary liquidation? If company members means who? Shareholders, or company creditors want to close the company, it is known as voluntary liquidation. The following balances are extracted from its books on the date. In question, he is giving balance sheet, liabilities, amount, assets, amount. Below to the balance sheet, he is giving some additional information. And finally, what he is asking us to prepare? Prepare a statement of affairs to be submitted to the meeting of creditors. So he is asking us to prepare statement of affairs. In case of voluntary liquidation, shareholders or creditors of company appoint a liquidator. So he has to complete company liquidation procedure. Liquidator doesn't know about the company assets and liabilities, no. Therefore, company's board of directors have to submit a report to the liquidator which contains the complete information about company assets and liabilities. So this report is known as Statement of Affairs. In short form, it is known as SOA. See, this is a solution. This is Statement of Affairs. Companies Act has given a format in which SOA is to be prepared. Means student has to follow that format. He should not prepare the Statement of Affairs by his own format. Heading is M Company Limited Statement of Affairs as on 1st March 2001. 2 columns. First column, assets not specifically pledged. Pledging means what? Giving to creditors as security as per list A. Second column, estimated realizable value. So in statement of affairs, the information we have to present in the form of lists. So list A to list H. List A contains assets not specifically pledged and list B contains assets specifically pledged as per list B. What is the meaning of this? In question, you can see a list of assets, no? See the additional information. Bank overdraft is secured against buildings. What is the meaning of this? See the liability side. Bank overdraft is 30,000 rupees. So bank overdraft means this company has taken loan from bank. So here banker is a creditor. So to that banker, company has to offer one security, no? So company offered these buildings. So by giving buildings to bankers as a security, company has taken this loan. Therefore, this building comes under which category? List A or list B? Assets specifically pledged. So assets which are secured against creditors' loan, they come under list B. And regarding other assets, there is no information like that. Means what? The other assets come under list A. Assets not specifically pledged. Means these assets have not been given to any creditors against loans as a security. So while presenting these assets under list A, as it is we should not write. See the order here in question, building. Anyhow building comes under list B, no? Forget about that. Plant and machinery, stock in trade, book data. In same order, we should not present under list A. So while writing the assets under list A, we have to follow liquidity order. Liquidity order means what? Most liquid assets we have to present in starting. So the assets which are having poor liquidity should be shown at the bottom. So if asset can be converted into cash form within a short period, then the meaning is that asset is possessing more liquidity quality. So in that order, if you observe, first with which asset we should start? Cash in hand, because this is having 100% liquidity quality, already it is in cash form. With that we have to start. Cash in hand amount is 10,000 rupees. Write down that. Next liquid asset is book debts. Book debt means what? Debtors. So we have given some benefit to them and they have to pay for that. So book debt in question 75,000 is given in the inner column, minus provisions means provision for bad debt 10,000. In outer column 65,000 is given. No? See, this is balance sheet. Balance sheet amounts are known as book values. In statement of affairs, we should not show the book values. In case of assets, estimated realizable values we have to show. Estimated realizable value means what? If liquidator sells these assets in market, how much money is going to come? That value only we should show in statement of affairs. In case of liabilities also same. So in balance sheet liability side, all these amounts are what? Book values. But which values we have to show in statement of affairs? Estimated payable values. Means at the time of liquidation, how much amounts liquidator has to pay to creditors. Those amounts we have to show here. Book debts, book value is 65,000. And in additional information, he is giving some extra point regarding this. Book debts will realize 70,000. Means at the time of liquidation, liquidator can collect 70,000 rupees from debtors. So this is 70,000 is estimated realizable value of debtors. No? Therefore, instead of writing this 65,000, in statement of affairs, we have to show 70,000 for book debts. Next one. Under liquidity order, next asset is calls in arrear. So calls in arrear means what? See this example. Company issued 10,000 shares at the rate of 10 rupees to shareholders. There is one shareholder known as Ravi. So Ravi purchased 1,000 shares. Then how much he has to pay to company? At the rate of 10 rupees each, on 1,000 shares, he has to pay 10,000 rupees. No? How company colored this 10,000 rupees? Not at a time. So company colors that amount on installment basis. So first amount is known as application money. For example, 3 rupees. Then how much Ravi paid to company? 1,000 shares into 3 rupee each, 3,000 rupees. Second installment amount is known as allotment money. For example, on one share, allotment money is 2 rupee. Then 1,000 into 2 rupee, 2,000. Then remaining amount, company colors in the form of calls. First call, second call, like that. Last call is known as final call. Assume that there are two calls here. First call amount 2 rupee 50 paisa. Final call amount is also 2 rupee 50 paisa. Then first call amount 2,500 Ravi paid. And final call, company made the call and assume Ravi has not yet paid this amount. So how much amount is due from Ravi? 2,500. Now this 2,500 is known as calls in arrear. So company has to receive this amount, no? Income to be received. Therefore, it is an asset. We cannot give this calls in arrear asset to any creditor as a security for loan, no? Therefore, it never comes under list B. So calls in arrears always under list A we have to show. In balance sheet, book value of this asset is 1 lakh rupees. See the additional information regarding this. Calls in arrears are expected to realize 90%. So from shareholder, 1 lakh is not going to come. So directors are expecting that only 90% value we can get from them. Therefore, net realizable value is 90,000 only. So on 1 lakh, 90%, 90,000 only we should show in statement of affairs. Under liquidity order, next asset is stock in trade. Stock in trade means nothing but stock, goods, inventory. So inventory book value is 95,000. And on realization, losses of 15,000 are expected on stock. Means when stock is sold by the liquidator, 95,000 is not going to come. So directors are expecting a loss of 15,000. Means finally how much money is going to realize? 95,000 minus 15,000, 80,000 only. So stock in trade 80,000. Next asset, plant and machinery. It is a fixed asset, no? It has poor liquidity quality. That is why at the end we have to show that. Book value is 2,10,000. In additional information, plant and machinery and buildings are valued at 1,50,000 and 1,20,000 respectively. So plant and machinery is valued at 1,50,000. So book value is 2,10,000 minus depreciation, then the remaining value is 1,50,000. So at the time of liquidation, plant and machinery actual value, market value is 1,50,000 only. Therefore, show that market price here, 1,50,000. Buildings, it comes under list B now. Therefore, we are not taken under list A. Plant and machinery completed. Stock in trade over. Book debt completed. Calls in arrear completed. Cash in hand completed. Profit and loss account is given under asset side, means it is a debit balance. So profit and loss account debit balance is known as fictitious asset. See, these are fictitious assets. Profit and loss account debit balance, discount on issue of shares or discount on issue of debentures, promotional expenses, etc. Actually, these are not assets. To complete the double entry under asset side, we show them. Means these amounts we cannot utilize for the payment of creditors' claims. Therefore, profit and loss account debit balance we should not show anywhere. Ignore it. Now, list A is completed. Total of all these amounts 4 lakh rupees. Next come to list B, assets specially pledged. List B contains 5 columns. In first column, the assets which are given to creditors as surety, that asset name you have to write. Second column, estimated realizable value. Here, building is given to creditors as surety, no? Therefore, in first column, buildings and estimated realizable value. See the question. Buildings in balance sheet 1,50,000 is the value, no? Book value. And in additional information, plant and machinery and buildings are valued at 1,50,000 and 1,20,000 respectively. So building market value is 1,20,000. So if we sell the building at the time of liquidation, 1,20,000 is going to come. So this 1,20,000 is known as estimated realizable value. And against which loan company has given this building as security? Bank overdraft. See, liability side. Bank overdraft amount is 30,000 rupees. So in third column, that amount we should write due to secured creditors. So here bank is called secured creditor because company has given building to them as a security. If company fails to repay this 30,000 rupees by selling this building, bank can recover their amount now. And in fourth column, deficiency ranking as unsecured creditors, we should write. So which amount we should write here? In this problem, asset value is 1,20,000 and the loan amount is 30,000. So asset value is more than this loan amount. Therefore, there is no deficiency. Need not to write anything. Difference is 1,20,000 minus 30,000, 90,000. No? That 90,000 is to be shown in fifth column. Surplus carried to last column. Last column means this one. So 90,000. Suppose loan amount is more, asset value is less. Then the difference we have to write in this deficiency column. If you write the amount here, then that amount we should not show in outer column, in last column. That amount again we should show under list E. What is list E? Unsecured creditors. Below to this, estimated surplus from assets specifically pledged. How much? 1,20,000 is a building asset. It is pledged. And how much is the surplus in that? 90,000. That 90,000 in outer column we should write. To this 4 lakh rupee, this 90,000 we have to add. 4,90,000. For 4,90,000, what we should write? Estimated total assets available for preferential creditors creditors secured by floating charge and unsecured creditors. So what is the meaning of this? Liquidator will sell all these assets now. Building also, after repaying 30,000 rupees to creditors, remaining value 90,000 will be with us. So 4 lakh plus 90,000, total 4 lakh 90,000 will be with the liquidator at the time of liquidation. With this amount, liquidator has to clear the claims of creditors. One creditor already here we have seen, secured creditors. So for their loan amount, full security is there. Who are the other creditors? Preferential creditors, creditors secured by floating charge and unsecured creditors. So to clear these three types of creditors claims with the liquidator, how much money is available now? 4,90,000. That we have calculated. Next, summary of gross assets. This 4,90,000 is what? Net asset value. Not only this net asset value, in inner column we have to show gross asset amount also. Gross realizable value of assets specifically pledged. So building 1,20,000 now. Net value is 90,000. Here we have shown that. Gross value is how much? 1,20,000 only now. Assume that company paid this overdraft amount to bankers. In that case, 1,20,000 we need not to use to pay this 30,000 loan now. Then total 1,20,000 will be available with liquidator to clear this credit amounts. Therefore, this gross value we have taken here. And other assets. Other assets where they are available? Under list A. So list A, gross value of all these assets 4 lakh now. That also you mention here. These two amounts total 5,20,000. This is known as gross assets value. So net asset value 4,90,000, gross asset value 5,20,000. In first page, we have shown the information about assets now. Here, from now onwards, we have to show the information regarding liabilities. You have to start with 3 columns, not 2 columns. Liabilities to be deducted from surplus or added to deficiency. And here gross liabilities. And the third column is a continuation of this column. Under list B, we have shown these as secured creditors now 30,000. First this information we have to show. Secured creditors as per list B to the extent to which claims are estimated to be covered by assets specifically pledged. What is the meaning of this? Secured creditor amount is 30,000. So against this, assets are secured now. Building is secured now. Means this is fully covered by this building. Therefore, this liability is coming under secured creditor. That information don't write here. In first column, we have to show that. Why we should not show in this third column? Because once you observe under assets information, how this 90,000 came? Building value 1,20,000 minus 30,000 OD value. Remaining amount 90,000 we have taken. Means this creditor amount 30,000 already we have deducted from building. So remaining value only we are taking to know whether we have sufficient money to clear the loans or not. That is why again we should not show 30,000 rupees here. Because already here we have deducted now. Assume that here we have taken 1,20,000 rupees. In that case, 30,000 we can show in this third column also. So what is this secured loan name? Bank overdraft. Show here 30,000 rupees. Next come to list C. List C contains preferential creditors. Preferential creditors means, see, this is the list of preferential creditors. Company has not given any security to them. Even though while repaying the loan amounts, liquidator should give preference to them. So those creditors are known as preferential creditors. Examples for these loans are government taxes, salary and wages to employees, leave encashment of employees and workers, outstanding employer ESI contribution, outstanding workmen compensation, outstanding PF, GF, SWF, PF, Provident Fund, GF gratuity fund, SWF staff welfare fund. Expenses of investigation. So if these expenses company has to pay, then they come under preferential creditors. Under liability side, creditors 40,000 is given now. In additional information, preferential creditors for taxes and wages 6,000 and miscellaneous expenses outstanding 2,000 are included in creditors. So in creditors, two liabilities separately is giving. One is 6,000 outstanding taxes and wages. Another one is 2,000 outstanding miscellaneous expenses. Taxes and wages come under preferential creditor list now, but miscellaneous expenses outstanding, it doesn't come here. Therefore, this is 6,000 only we should show under list C. So taxes and wages. Here 6,000 and here also in third column also we have to show that. So this 6,000 from this net asset value we have to subtract. That only we have written here. See, liabilities to be deducted from surplus or added to deficiency. What is the meaning of this sentence? See here, 4 lakh plus 90,000 is equal to 4 lakh 90,000. So this is plus value, no? Means surplus. Assume that this amount is higher than this amount. Then minus value comes here. That is called deficit. If a deficit comes, all these values we have to add to that deficiency. If a surplus comes, all these amounts one by one we have to subtract from surplus. As this is surplus amount 6,000, now we have to subtract. 4,90,000 minus 6,000 is equal 4,84,000. List C is completed. Next come to list D, that is creditors secured by floating charge. Floating charge creditors means who? See this one, bank overdraft 30,000 is there, no? These creditors are coming under secured creditors. Suppose company failed to repay this loan amount to banker, then which asset they can sell and recover their amount? Building. Only one particular asset. But creditors secured by floating charge means what? If company fails to repay the loan amounts to them, they can take any one of these assets. So no particular asset is pledged to them against their loan. So by selling any one asset, they can get their money. So these type of creditors come under floating charge creditors. Who are they? Under liability side, debentures. In brackets clearly is giving secured by a floating charge, 2 lakh rupees. So debentures come under creditors secured by floating charge. Their amount is 2 lakh rupees, book value. And here there is no extra information regarding debentures. Means our assumption is book value is the net payable value. Therefore, same 2 lakh rupees here and here we are going to take. So 2 lakh rupees in third column. From 4,84,000, liquidator pays 2 lakh rupees to debenture holders. Then the remaining asset value is 2,84,000. Now, liquidator should give preference to unsecured creditors. Unsecured creditors come under list E. Who are unsecured creditors in this question? Equity shares. It doesn't come under creditors. Afterwards, we'll see this. Debentures, just now completed. They are coming under floating charge creditors. Bank overdraft, secured creditor, no? Creditors, 40,000. In 40,000, 6,000 is a preferential creditor, no? Then the remaining amount, 40,000 minus 6,000 is equal 34,000. This amount comes under unsecured creditors. That 34,000 in first column and in third column. So from 2,84,000, 34,000 when we pay, then the remaining asset value is 2,50,000. For this, what to write here? Estimated surplus as regards creditors being the difference between gross assets and gross liabilities. So assets minus liabilities. Then finally, how much amount will be left over with liquidator? 2,50,000 rupees. This is surplus because plus value, no? First column, all these liabilities total, we have to show 2,70,000. Now with this 2,50,000, liquidator has to pay the claims of shareholders. Shareholders are of two types, equity shareholders, preference shareholders. See the question. Under liability side, capital 50,000 equity shares at 10 rupees each, 5 lakh rupee. And there is no information regarding preference shares. If preference shares are given, here list F also we have to show. But preference shares are not there, no. Therefore, after list E, directly we have to show list G. List G is what? Issued and paid up capital 50,000 equity shares of 10 rupees each. 50,000 into 10 rupee, 5 lakh rupee. So list G contains equity shareholders information. So to equity shareholders, how much company has to pay? 5 lakh rupee. But available amount with liquidator is only 2,50,000. So this total 2,50,000 we can pay to them, and more 2,50,000 we cannot pay. Therefore, this 2,50,000 is known as estimated deficiency as regards members. Here members means equity shareholders, nothing but contributories. Finally, company cannot meet their claims fully. So company has to pay 5 lakh rupees to them, but available money with the company is only 2,50,000. So this 2,50,000 is as per list H. In this manner, Board of Directors prepare statement of affairs and they submit this report to company's liquidator. So this is the end of present problem. Take a screenshot of this solution. Continuation of the solution. Second page. Continuation. This is the end of present video. Hope this video is helpful to you. Thank you.